Virendra Mhaiskar, the chairman and MD at IRB Infrastructure Developers, and also joining in Vinayak Chatterjee, chairman at Feedback Infra. Chairman, morning. Good to have you on the show. Mr. Mhaiskar, if I could start the discussion with you. Disappointed that infra allocations remain flat?
Good morning. No, I am not disappointed because I see a silver lining in that. I would like to elaborate a bit on this. When you say the provision of funds is little lesser, but at the same time they have articulated very clearly that they are going to focus on 15,500 kilometers of highway development till 2024. So there is a rational plan in place. The talks of 30 kilometers, 40 kilometers are nowhere there. There is a same plan which can be executed. And with lower fund allocation, it also clearly means that the balance gap will have to be filled in by private sector. And that certainly means revival of the BOT roadmap going forward. And that is the silver lining that I'm looking at. With a lot of other incentives that are being given, I think it will be a leg up for the road sector for sure.
Vinayak, good morning. Thank you for joining us. Why is your smile telling me that you will only tell me budget was great and good?
No, I may not.
So sometimes looks and smile can be deceptive. Now let's start with the bad news. Nothing came. I mean, yes, allocation, but that was expected.
Okay, so let's, I don't want to speak about specific sectors, but let's take a look at the infrastructure sector vis-a-vis the strategy for revival of the economy as a whole. Very clearly, to pull the economy out of this vicious downward spiral, which is happening for many quarters, you needed a sledgehammer approach to convert it into a virtuous cycle of growth. That is the basic, shall we say, expectation from the budget and government policy. Budget being, in a sense, an exposition of government thinking and government policy. The finance minister had two clear macro choices before her. One, should she follow or should the nation follow a consumption-led revival strategy, or should the country follow an investment-led strategy for revival? If the former was the chosen strategy, then you would have seen vast number of direct benefit transfer increases, reduction of taxes, anything to put more money in the hands to revive a consumption demand. Obviously, that is not the route taken. The route taken, which is reasonably explicit in the budget speech, is an investment-led turnaround strategy. Now, that is clear. Now, on this strategy, there are two elements of this strategy. One, a pipeline of projects, and the available financing. Now, so far as pipeline of projects is concerned, all of us in the market have kind of soaked in the 102 lakh crore in infra investment plan for the next 5 years or 6 years, which on an average is about 20 lakh crores per annum. Now, that is the sum and substance of the huge challenging revival strategy. So you've got some degree of detailed work, more to be done on the national infrastructure pipeline, and the 20 lakh crore is not immediately, not for this year, but is an average. So it will be 16, 18, 20, 22, 24. So let us concentrate on this year, which would certainly need for execution of this strategy, 16 to 17 lakh crores, right? Now look at the financing side of the budget. What do we see there? If you see budgetary allocations, if you add extra budgetary investments of public sector companies, if you add the expected investments by states themselves and urban local bodies, you will broadly come to a picture of around 10 or to 12 lakh crores, right? Therefore, there is very clearly, economists who are doing a deep dive in the next few days can actually come up with the right number. But to my mind, the back of the envelope number of a financing deficit to execute this strategy is anywhere around 6 lakh crores. That is the bottom line. So the desire to use an investment-led growth strategy with some homework done on an infra pipeline is not really matched or does not give the confidence and the credibility to say that the government has completely thought through the matching finance plan. So what can be done? I think there are two things which we had expected or we had recommended. One was a very strong statement of revival of PPP. That does not seem to have happened other than some mention in the healthcare sector. And secondly, a massive DFI, a developmental financial institution for infrastructure, which could leverage funds from the budget. The budget could have allocated 1.5–2 lakh crores and allowed a new DFI to leverage it 10 times or 20 times to give the credibility for a clear roadmap for the next 4 to 5 years as the execution plan of the strategy. So therefore, that is my summary of the broad macro take vis-a-vis infrastructure, the budget and the economic revival scenario. But let me stop here.
Nobody is spoken about the sovereign fund angle, where if you're a sovereign fund, you get a large tax break. I'm surprised that none of the brokerage reports, including my colleagues in other media and newspapers, they are mentioning that. Am I missing on something? Because my understanding is that, look, the ideas and the other sovereign funds, they need capital. They had cash and they will be happy to invest in some of the Indian infra projects.
Look, by and large, the pension funds and the sovereign funds till now have invested in NIIF and they have participated. Some of them, I'm not sure I'd call them sovereign wealth funds, but many of the long-term pension funds have invested in operating brownfield assets. Their investments are over a long period of time, 10, 15, 20 years. And that is around the time they will see the break in their income, the income tax break on their dividend income, their interest income, etc. So first they have to put in fresh money. Normally that money comes into operating brownfield assets and not into greenfield assets or greenfield asset creation, which is what the economy requires. Jobs, steel, cement. So greenfield is more important than brownfield. And the effects of this is spread out across so many years upfront that I think very few people have factored it in. And also the sovereign wealth funds that are investing in India, you can count broadly on the 5 fingers of your hand. I mean, so it's not particularly broad-based, but yes, it does provide a favorable ambience and an impact for these sovereign wealth funds to leverage IIFCL and NIIF as has been broadly envisaged.
Mhaiskar, let me get you in here as well, on some of the key highlights that stood out for you, in terms of the cycle where it's headed from here, in terms of, the kind of assets, like we were talking about the sovereign wealth funds that will attract interest.
Sure. I think from where I left off, the deficit that we just talked about in the infra plan of 6 lakh odd crores, I think that is where the private sector and the FPIs and the funds would chip in. And I think that is a space left which I was trying to articulate. And I think this is the opportunity for PPP revival to come in meaningfully. As far as the sovereign wealth funds are concerned, I think, yes, they might be easy to count them on fingers, but they have meaningful investment firepower. And if I just look at the road sector alone, if I just dwell on the transaction that we are on, I think 4,400 crores of investment that we have signed up with GIC affiliates. I think these kind of investments through sovereign wealth funds will now be more upcoming. It will throw up a big opportunity for them to co-invest with Indian developers who want to execute large projects and the TOTs and the BOTs that the government might come up with now. And I think it's a massive opportunity because we need capital. And these are the guys who can provide that capital. I don't think there is any dearth of execution capabilities in the country. What we needed was capital, and this can be the firepower that can come in and give a lot of tailwinds to Indian developers to take this opportunity, which the government is now wanting to open up. And I mean, yeah, the IIFCLs and the NIIFs and the government initiatives will certainly be there. But it certainly is going to open up a large opportunity for the private sector to chip in what was the order of the day till few years ago. And I see that coming back in a very, very strong way.
Gentlemen, thank you so much. We'll have to leave it there.
And these tax exemptions which we talked about, I think that will give a lot of leg up for these funds to come and invest meaningfully.
All right, we'll leave it there for now. Thanks so much for joining us with your take on the budget this time around, Vinayak, Mr. Mhaiskar. We need to take a very quick break.